Hi, I'm Kalilah Reynolds, and welcome to the first episode of Taking Stock, a new show that makes business and finance easy to understand. We're uncomplicating the latest developments on the stock market so that you can make the best decisions for your money and take advantage of one of the best performing stock exchanges in the world. And we're bringing you all the latest business and economic developments and telling you how they will affect you and your money. Come on, let's get this money. First up, businessman John Jackson joins me to tell me all about his new investment company, QWI, and their initial public offer. And later, the analysts weigh in on the latest stock market developments. But first, here's what's hot in biz.
Scotia Group is reporting $9.8 billion in net income for the 9 months ended July 31, 2019. That's a 12% fall compared to the same period last year. However, President and CEO David Noel says their loan portfolio was also up 12% over the previous year. This was spurred by Scotia's lower residential mortgage rates, now at 6.99%. The initial public offer for the new investment firm on the block, QWI, opened on Monday. More on that later in the show. And the Jamaican government bought back $1.2 billion of foreign debt earlier this month in a move that will save the country billions of dollars annually in interest payments. The government also floated a new $815 million bond. The transactions are part of a refinancing plan aimed at replacing expensive external bonds with cheaper debt and taking advantage of the country's improved economic status.
And when we come back, they call him the investment guru. We're taking stock with businessman John Jackson. Welcome back to Taking Stock. Now, QWI Investments' initial public offer opens on Monday, September 16, and it's already causing a lot of excitement on the market, triggering the JSE's circuit breaker twice in one day for parent company Jamaican Teas. So here's a quick look at the offer. They're selling 600 million ordinary shares, seeking to raise $787 million. Only 270 million shares are open to the public at a share price of $1.35 each. But if you're an existing shareholder of Jamaican Teas, you can apply in the reserved pool and get a discount at $1.25 each. And if demand is high enough, they could add another 300 million shares. The minimum investment, 10,000 shares, so you can get in on this for as little as $13,500 plus minimal fees. And the lead broker is NCB Capital Markets. Joining me now is the face of QWI. His financial blog, IC Insider, is the go-to for those who want to be in the know. He sits on many public and private boards. By trade, he's a chartered accountant. We also know him as an entrepreneur. Welcome, John Jackson.
Thanks to be here.
Good to have you. So tell us all about QWI. You're the new kid on the block in terms of investment firms. What do you do? What's your strategy?
Well, the strategy is to invest funds in stocks and shares primarily. That's the primary objective at this stage, to maximize the returns on investment. And so far we've done, I think, pretty well. We've done just over 50% after expenses since the end of March.
Just over 50% what?
Return on
investment.
The gain since March is 50%. So if we had invested $100,000, it's $150.
Since March, and that's only a few months ago.
That's correct.
Mm-hmm. So what makes you different then than any other investment firm out there?
Well, I think we're the only firm that will actively manage the investment in terms of equities to try and maximize the returns on it, return on investment. So there are some that are passive, some that are, because of the size of the portfolio, blocks in the portfolio, don't have the same flexibility that we may have. Mm-hmm. And we just look for opportunities where we see them, and we're constantly looking for opportunities. and we will get rid of stocks if we believe the stocks have actually reached a level that's not going to deliver the type of return we think is acceptable in the short to medium term.
And how often do you make those types of decisions?
We look at the market on a daily basis, 7 days a week. So we're constantly looking at opportunities while trading is taking place, when company results are released. And on weekends, we spend time looking at, look at which stocks are better value than others and where we may see opportunities that may not have existed. We probably didn't identify before.
By the way, who's we? Because a lot will depend on whether people trust you and your team to make these decisions and deliver the returns you believe you can deliver. So who's your investment team?
The team comprises myself. I'm the chairman of the investment committee. The director is David Stevens. He's another person. He's personally involved in investments, in the market, and he's a businessman in his own right. Cameron Burnett, who is a chartered accountant like myself. He sits on the investment committee. John Mafood, although he's not a member officially of the investment committee, John goes back years, and he worked for security brokers, etc. So, and he's an investor in his own right. Carl Carb is an investor in his own right with significant amount of investment. And Malcolm MacDonald, who is a director, also has knowledge of the investment market. So, but Kalilah, when you look at the portfolio, the performance of the stocks we have had before QE took it over, you see a level of consistency by and large that's there. So one don't have to look at the 50.5% just now, but look at the fact that we have delivered. We have also, most of us, a number of us have been directors of Jamaican Teas. And when I joined Jamaica Teas as a director, the shares went to the market at $2.95. We have had 2 splits so far, and we are now, well, today's closing price is something like $7. It went up to $8 something. So that we have delivered performance with Jamaica Teas, and we're delivering performance with QE. And I think
QE, that's what you're calling it.
We call it QE. Yeah, QE. Well, and people ask why QE. The fact of the matter is that we wanted to have named it KIW Kiwi Capital, but the name was already taken, so we decided to use Q. So some people are asking that question. So so we wanted to try and preserve the KIW because KIW went down for years, and we have resurrected it, and it has morphed into that. But KIW still owns the larger block of shares at the moment in QWI Investments Limited. So, so we have, I've been investing for years, and the marketplace seems to have some amount of respect for my skills. When people look at the recommendation we make, and some people are pretty happy with the recommendation. They have taken advantage of it, and so we try to combine all forces together to try and deliver the best that we can.
So 50% in March, April, May, June, July, August, September, less than 6 months is pretty impressive, but I don't know if it's realistic for people to expect that type of return going forward. What are you actually projecting is going to be your return?
Well, there's a projection in the prospectus, and I don't quite remember the numbers. A lot is going to be dependent on the performance of the stock market. One of the things that have happened over the last 3 or 4 years is that interest rates have actually declined quite sharply. And that's a significant part of why the stock market has performed the way it has performed. If interest rates were to reverse somewhat, you'll see a slowdown in the rate of growth. But the economy is also growing in real terms, and that will also create opportunities for companies to make good profits. My own view is that you're going to get a rate of return in the next few years that will be far better than anything else you can get, whether it be real estate or fixed interest security. That is what I would say. I wouldn't really, because it's very difficult to predict. I believe before the market comes to any rest, we have another 20 to 30% more gains left in the market index. And that is what I would believe is going to happen over the next maybe 12 months or a little over 12 months. So if the market does that, we believe that we can actually outperform. There's a good chance that we can actually outperform the market.
Okay, and looking at what you've done so far, you've outperformed the market
Yes.
since you've begun. But again, it's only a short period of time
It
that
is.
you've been around. Talk to me about your strategy for diversifying outside of Jamaica, investing in regional and international stocks. What are you looking at there?
Well, we're looking initially at about 25% or thereabout being invested overseas. And we think shortly after we would have had the closing of the issue that we'll start to make a move in that direction. We monitor what's going on in Trinidad. We think there are some opportunities in Trinidad. We're not quite sure if this is the time to invest in Trinidad, but there are opportunities there. And with Ghana finding oil, and it's going to have a spillover effect.
Do they have a stock market in Guyana?
There is a stock market, but it's small and relatively insignificant, not very liquid in the form of trading. So, but there are opportunities if you can buy into that market as well. But it's probably better you buy through Trinidad, where the companies such as Trinidad Cement and Massey Holdings and Republic Bank are exposed to have operations in Ghana and will probably benefit from economic developments in that marketplace.
And further afield, outside the Caribbean region, what are you looking at?
We're looking at the United States market.
US.
US. And it may be US, through US, but the international stockbrokers cover a series of businesses. Some may be US based, some may be based overseas. So we've identified a broker who is on board, and he has an interesting strategy that he utilizes that has thrown up significant gains. So you're not just relying on picking a stock purely from a fundamental standpoint. There's a lot of technical analysis that comes to bear.
But one would imagine that to get the type of returns that you're seeking to get to outperform the market, you have to take more risk. It's going to be a riskier investment for people who decide to go with QE.
I'm not sure that that's the case. One of the things that has happened in Jamaica is that a lot of persons tend to look back at what the performance is and say the stock is cheap or expensive based on historical earnings. Our approach is to take the data, analyze and see and make projections. In other words, we are doing what the businessman will do. We are creating a budget of each individual company and looking down the road based on past performance and what's happening in the wider economy as to what those results are going to look like. So when people are waiting for results to tell them to buy, we already would have bought because we have already seen. And a classic case in point is the shares we bought in Barita. When persons thought they should sell Barita, our position was to buy Barita, and it has paid enormously well. Cement is another one where cement was struggling at 29, 13, bouncing around. We had cement, we bought additional cement, and it has paid off. So
you believe you have the formula?
Well, we have a reasonably good formula.
We've got the analyst standing by when we come back. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. Tonight, we're joined by Ferris Jackson, Portfolio Manager for Global Equities at Barita Investments. David Rose, he's three-time winner of the Jamaica Stock Exchange's Young Investor Competition. And Romario Sterling, he's a research analyst. But first, here's your market recap.
Not the best week on the JSE for the week ending Friday, September 13, as 50 of the 79 stocks that traded last week actually declined. 26 advanced and 3 traded firm. There was also a lot of activity surrounding Wigton Wind Farm and Sagicor Select Fund. Wigton took up more than 40% of market volume, with people buying and selling 66 million ordinary shares in the energy company. Overall, their share price was down 2% to close on Friday at 89 cents. Meanwhile, 41 million Sagicor Select Fund shares traded, representing 25% of market volume. Share prices are now down to $1.16 after losing 9 cents this week. And Supreme Ventures was third among the volume leaders, with 10 million units changing hands. Blue Power Group led the market this week. Share price is up 34% to close on Friday at $9.15. Could this be a sign of things to come as they prepare to spin off their lucrative lumber depot into a separate listed company? MPC Caribbean Clean Energy also saw significant gains, its share price jumping 17% to close the week at $153.06. No doubt, investors were seeking to take advantage of that attractive dividends payment coming up to shareholders on record as of September 16. On the losing side now, and there were a lot, 11 companies seeing double-digit falls in share price, led by T-Tech, which lost 25% of its value, closing Friday at $4.92. Honeybun was down 22%, closing at $5.35. And Caribbean Flavors and Fragrances lost 20%, closing at $12.75. But not to worry too much. Industry insiders say this type of activity is typical ahead of an IPO, as many investors liquidate their stocks in order to acquire funds to take advantage of the new listing.
Gentlemen, good to have you on.
Thank you very much.
All right. Well, let's jump right in. Let's start with you, Ferris. What was the most significant thing on the market this week?
Well, you mentioned this week, but to be honest with you, for the past, since the start of the month, Barita rights issue, that's the most significant thing. I mean, Barita generated over 640% return for shareholders since over the past 12 months. So, I mean, that is something very exciting. The main market delivered a return of 57% over the past 12 months. So, I mean, investors would have been very happy with their investment in Barita Investments Limited.
That's pretty big, and you guys had to actually upsize the rights issue.
Very much so, and that speaks to the confidence that investors place in our company. I mean, since Cornerstone took the baton from Rita Humphries-Lowe, our former chairman, I mean, the company has done remarkably well. The stock, the offer was $9.20, and now it's at $71. So that's a significant return for shareholders. And of course,
in a short amount of time.
Right, and the dividend payment as well, $1.26. And since the takeover, the company has paid more dividends since listing in 2010. So, I mean, though it's exciting days ahead for Barita Investments Limited.
All right, David.
Well, this week, several companies released the results. The lab, their 9 months profit actually has surpassed their audited 12-month financials. And even today, Scotia Group Jamaica released their financials. Their net profit was down due to the one-off acquisition, or I should say sale of a subsidiary and IFRS, but they are paying a special dividend, and this one totals about 3.9 billion Jamaican dollars, which is an interesting signal because they just recently paid $7.9 million about 2 months ago.
So you see more interest in Scotia this week?
Well,
from shareholders, from investors?
Well, the market is interested in Scotia stock with that kind of interest. It's actually with Jamaica Teas in consideration with QWI, but recent results.
We're going to come to Jam Teas soon, because we definitely have to talk about what happened there with the QE. I have to get used to saying that, the QE listing. Yeah, Romario, for you.
Just to comment earlier, so regarding Scotia, I don't really expect investors to react much to it because of the perception that they won't be able to grow, their profit going forward. Especially, well, not necessarily that they won't be able to grow their profits going forward, but they're in a restructuring phase. So a lot of people are kind of concerned about that, and they haven't really delivered any results that has been impressive to investors. It's trading at a low PE ratio relative to other financial institutions on the main market. However, in terms of efficiency, investors may be concerned about that, especially since they're selling Scotia Insurance, which has been one of their most profitable subsidiaries. And the scaling back of Scotia could actually result in lower earnings going forward because they're trying to focus on their core. As it relates to this week.
Before you move on to next week, tell the viewers quickly why them being at a low PE ratio is bad.
It's not a bad thing, actually. So it's actually a good thing. A low PE ratio, it can be a good thing because it means that the stock is potentially undervalued, but that's not always the case. It could also mean that something is fundamentally wrong with the company, because the PE ratio is basically a market-based valuation method that analysts use to determine whether or not a stock is undervalued. So what you're really looking at is the price movement relative to the company's earnings. So what analysts usually look at is basically if the price is moving at a much faster pace than earnings is moving, then really and truly the stock may be overvalued because the price is moving but the earnings is not following.
So you see value in Scotia Scotia right
in
now.
Scotia, no. So right now, even though the PE ratio is low, the earnings is also not really growing. So that would be one of the companies that basically meet that anomaly where, you know, the PE ratio is low for, well, not anomaly, but the PE ratio is low for a reason. Low meaning that investors are not interested in the stock right now because they're not so optimistic about the company's growth prospects.
I want to hear these guys on that if we have time. But first, you said the most significant thing on the market for you.
The most significant thing on the market for me this week, well, two things kind of piqued my interest. Jamaican teas, the movement in the stock price, and that's primarily been influenced by the QWI offer, since Jamaican teas shareholders will receive special shares and a discount, right. So investors are buying into it. The stock has advanced by over 30% since the start of the week. The movement in Sagicor Select Funds is also another interesting take. We've seen where the price of Sagicor Select Funds have come down significantly, coming closer to the NAV, because the NAV is another metric
and
that
that's
you use
net asset
value per share. So that's a metric that you really look at to determine whether or not a fund is overvalued or undervalued. When Sagicor Select Funds went to the market, or started trading, the price went up to as much as $1.60, $1.70. And right now it's coming right back down, closer to the NAV. So we've seen where the market is basically correcting itself.
And people are jittery about Select F right now. Well, let's come to QE because we have limited time, and I really want to get into that since the prospectus is now out. Ferris, what do you make of it?
I mean, it's another option for investors on the market. So prior to now, you had unit trust funds, capital, equity-linked unit trust products. And QWI is just joining those list of companies that are coming on the market in the form of funds. So we had MJE, Mayberry Jamaican Equities, and then we have the Sagicor Select Fund, which is more a passive investment option for investors. So this is just another option where investors will primarily benefit from the expertise of the managers at Jamaican Teas. So John Jackson, with an experienced individual in the investment industry, is known, and there's Cameron Burnett also. He has some knowledge in investment. So what you're betting on is the knowledge and experience of these individuals, as well as the fact that the market is doing pretty well right now. So if you're investing in an equity-linked product, then you're quite likely to do well.
David, you gonna give QE your money?
Well, I'm continuing to enter the IPO, yes, but I haven't done my full test as yet because I went to the prospectus, but I didn't get to do my full analysis as yet. But it looks pretty interesting considering that it's relatively diversified at 37 companies right now. At this time right now, the biggest holdings are from Cameron Cement, Barita, NCB, coming tremendously well, and some of these companies going forward are going to give good returns. So even with the prospect of international companies, it'll be pretty interesting to see what they're going to do going forward. So,
anything that would make you hesitant?
No, I actually think it is a good investment. Firstly, based on the fact that it's coming to the market at a discount to the NAV. It's coming at an 11.18% discount to investors. So investors have an immediate opportunity to see some capital appreciation on their investments. Secondly, I think the fund offers something different relative to other listed equity funds right now because they have the intention to diversify the portfolio into global assets, which presents another opportunity for Jamaican investors to benefit from any bull market upswing in other markets. There's also the fact that the liquidity should also be good on it because about 56% of the fund's post-IPO share capital will be on the market, which means that the stock will be very liquid, which allows for good price discovery. And I also like the fact that historically they've proven themselves because the annual returns on the fund has been higher than almost every equity fund that unit trust equity funds, as well as higher than other listed equity funds right now. Another differentiating factor as well is that a lot of people probably, it's not necessarily a fair or a fully 100% accurate comparison with select funds because select funds targets an index, but it also gives you an opportunity to, the difference between it and the select fund is that it's more diversified, where the select funds track stocks in a particular sector, where this basically gives you exposure to multiple industries.
Anything that would give you pause, Ferris?
No, except for the fact that the management, the experience of the managers in the international arena. I mean, that's the tough market to go into.
Yeah, they're well experienced here.
Right.
But they've also stated in the prospectus that they will actually seek the advice of external professionals to guide their investments externally. So it's not necessarily going to be on the onus of the investment managers here. They'll seek the expertise and knowledge of people who are knowledgeable about other markets.
One thing I also saw was the compensation package, the hurdle rate, and just a few other things that were just a concern to me. So their compensation is $1 million retainer per director. The chairman gets $1.2 million, and the hurdle they're using, the particular index, it has been going down for years, so they're easily beating that particular index.
So they're paying themselves pretty well to manage this fund on behalf of shareholders.
And there's also 1.2% fee to Jamaica Teas to manage administrative functions. Yes, so I'm just looking at those expenses as well in my consideration.
Yeah, it adds up to a lot.
I think it's cost effective though when you really look at it compared to say MJE. I mean they pay themselves based on the total comprehensive income, about 8% of that. I mean that's pretty high when you compare to QWI, which is cost effective, and of course the exposure to the foreign markets if they do well. I mean that's a plus for investors. Right, so I mean that's an opportunity still for investors who don't wish to buy the stocks themselves but benefit from the expertise of a fund manager. Then you can get the exposure to QWI.
So for you, it's a buy?
Yeah, it's a buy below the NAV. So
no, it's a buy.
David,
it's a buy.
For Mario, a buy as well. Well, sounds good for QWI. Thanks, gentlemen. Let's take our final break. When we come back, we'll have the bottom line. I'm Kalilah Reynolds. Thanks to my hard-working production team and to you, the viewers. Check out my social media at Kalilah Ray on Instagram and Twitter, and my YouTube channel, youtube.com/Kalilah Ray. Tell a friend that you want to see this show, Taking Stock, on your local television. You can make it happen.